So this trade, this is just a screenshot of a profitable trade that I took off of an area of demand and support. And so I mean, oh my god. So I went long on this trade, right? This red area is where I identified supply, and down here at this green and these yellow lines, that's the area of support and where I identified demand on this chart, right? And then you can see we opened up higher and the stock came down. Um, and then once we got near this area, we didn't really touch it, but we got close enough. We started seeing different action that indicated to me, all right, there's buyers entering the market. Where I entered, look at this candle right here. This is a hammer candle with a wide, with a bigger body. And look how far down we came, and then closed up higher before that time frame closed. And this is on the 1 minute chart. And then look down here if you see the volume associated with it. Like, it's higher than the average, most of the average volume on the other ones too. And then, we came up of that, and then we came up here, and then this is the trade. This is the area where I got out because I started seeing rejection right here. Like this candle right here, because of the wick, once we got up to this area, started to reject, even though we did go up a little bit higher and actually hit that area where I identified supply completely, because I saw information that was saying, all right, the stock might not go up any higher than it is. I don't want the trade to turn red on me. I don't want to lose out on the profits that I have. I'm going to exit with what I have right now and take what I have off of the table. Because your job as a trader is to extract money from the market. That's it. Extract as much as you can from the market. And so, this is just more of a breakdown. I went long on SPY after I saw evidence of bullish price action near the 454 support level on the ticker. If you see the candlestick with the arrow pointed to it, that was my entry, and I exited once we got up to resistance at 455. See? Resistance right here. This was my entry. We went up. I got out. And then let's break it down some more. So price sold off, came down to 454.10. I saw evidence of selling strength and the selling strength started to slow down with the doji candle, and then the long-tailed hammer candle, although tested and bounced off a significant area of support, right? So we have this hammer candle and we have this doji candle. Remember, I told you dojis represent indecision and a change in sentiment based off of where it is located on the chart and in respect to the other candles next to it. So like we got this selling, but then we had this doji candle and this hammer candle. That was enough for me to say, okay, I need to get in this trade because we have this area of demand that I previously identified, and then a doji candle and then a hammer candle. That's three different pieces of information that all signify, people are entering right here. There's positions building at this area. There's demand. So I want to hop on that train. I want to catch some of that move. It's that simple. And then look at the volume of the first candle. I already showed you that. And then it makes another hammer candle that created a higher low. So even though this is the 1 minute chart, right? I'm looking at the structure of this chart. We're going down. We're making lower highs. Yeah, all right. So look at this. We're going down, right? We're in kind of a downtrend until we get this area of support. We're making lower lows, and then this is the lowest low, right? And then look at this. It comes down. None of these candles actually close below this red area right here. We do trade below it, but then we move up higher, and every single time we come down to this area right here, look at with the wicks, you can see that the trade does, like the stock price doesn't stay down there for long because people are buying it. There's demand at this area. And then this is the lowest we got at that moment, right? And then up here, look at that. That's a higher low. That indicates a shift on top of all of the other information that I previously told you about with the hammer candle, with the doji candle, with being at this area of demand. And then after that we had after this secondary hammer candle and that higher low, we had a wide body candle, and then another one until we rejected that area where I decided to get out. This was a what 6 minute trade, and I profited off of that trade with an option. I think it was a 0 day expiration option, but that's really how simple it is. And it's just gaining the experience, gaining the, and just staying disciplined, following your plan, so you're able to execute like that repeatedly every single time. So yeah, rallied strongly up until 455, made a slight rejection, and I took that as the signal to get out. And if you're wondering where I would have cut my loss on that trade, I would have exited once it hit negative 15% on the option, or my technical stop loss would have been right underneath that hammer candle. Because my thesis in this, right? Look, remember I told you this red line, price never closed below this area right here. Every single time, all we got were wicks. And then look at this. This candle came down and then closed above it with super high volume, meaning that the market, like, sellers were trying to bring this down lower, but demand was too strong. Demand was way too strong in this area, and it just showed us evidence of it being bought. So if we were to break below this candle, or maybe even if we were able to break below this and actually close below it and not form a wick, if we form, like, say, a candle like a wide body candle, or whatever, if we close below that area, my technical stop loss would have been triggered, because this idea that I had right here would have been invalidated, because I talked about how it's making lower lows, and then a higher low, right? So if we made that higher low and I got in, and then after that higher low, we make a lower low again, that means the structure is bearish, it's not turning bullish. So I'm not anticipating a bullish move, because the structure that is showing me right now is a lower low and it's a bearish structure. I want to talk about, the market structure and everything like that. That's how you actually want to apply it. That's how you actually want to look at these things. That's how you want to be thinking and using that kind of information to make your decisions. And yeah, like, that's, and you can see how all of these concepts I taught together can be used to profit. It looks easy, right? And if you practice and stay disciplined, it will be, and it can be easy.